Anyway, though, getting back to the markets, they hammered the gold mining stocks. A lot of times when stocks go down, people say, hey, I never talk about them when they go down. I like to talk about them more when they go down because it's a better buying opportunity when they go down. But they hammered the gold stocks today about 4% or so. Gold was down about 15 to 20 bucks, somewhere in there. I'm looking at it right now, 9:20 in the evening, East Coast time. Gold's about $1,937 an ounce. One of the catalysts for this morning's sell-off, although gold was already down and then it just went down more, I think were the data that came out at 8:30 a.m. on housing starts and permits, which was much, much stronger than had been anticipated. In fact, the consensus for starts was 1.4 million. And we got 1.631 million. That was a big number. The upper end of the range was 1.45 million. So I don't know where this number came from. My guess is they're going to revise it away, but the markets reacted to it. In fact, they actually downwardly revised the previous month.
Hey everyone, welcome back to our channel. In today's video, we have a lot to cover. We'll start with an exciting discussion about the recent buzz around new ways to gamble on Bitcoin. But before we dive into that, I want to share a warning from Peter Schiff, the CEO of Euro-Pacific Capital, who believes that the 2008 crisis was just the beginning of a larger sovereign debt crisis in the United States, possibly leading to a collapse of the US dollar. Now, let's get back to the markets and explore the impact on gold mining stocks and the price of gold.
From 140 to 1.34 million. These are, annualized numbers. So that was a big downward revision in April. So they'll probably have another big downward revision in May. We'll have to wait. But also the permit numbers were also big, not as big a beat as the starts, but they were looking for 1.433 million and we got 1.491 million. So I think this got people thinking, the economy is stronger, so the Fed's going to have to be higher for longer. I mean, the same old song. But again, there are computers that are trading this gold market. And I think they automatically react, like they're pre-programmed to look for this number. And if this number is above a certain percent above estimates, they just automatically sell gold, right? I mean, they would buy it, I guess, if the numbers were really weak. But they just already have these things programmed in. And so there's so much noise in the market that they're not really reflecting the reality of what is the perfect environment for the price of gold. Gold should be much higher. Gold stocks should be even more significantly higher right now than gold. I think the mining stocks are even more underpriced than the metal itself. And again, that just reflects the sentiment that people have for the future price of gold. I don't know how long this is going to last. I mean, how much longer gold could be in this situation where it doesn't explode, where the traders haven't, put the pieces of the puzzle together. But just take advantage of it, during this time period where they haven't. But, obviously, different situation going on in fool's gold. We have had an explosive rally in Bitcoin. In fact, it's exploding even more as I'm doing this podcast. It was below 25,000 when it sold off at its low last week. So that is a very significant rally off of that low. There have been two catalysts for this rise. The first one was the fact that BlackRock, and I think it was BlackRock and not Blackstone. I keep mixing these guys up, but BlackRock had announced that it was filing for a Bitcoin ETF. Now, I don't know what makes them think that they're going to have any more luck than Grayscale or anybody else who has been trying to get a Bitcoin ETF in the US. But in any event, they filed for one. And that caused the initial rally in Bitcoin from, low 25,000 up to 26, 27,000 in that area. Today's rally was sparked by more news that I think Citadel is partnering with a couple of other Wall Street firms maybe Fidelity, I forget, Schwab or somebody, a couple of firms, and they're going to be creating a new crypto exchange. It's going to be a non-custodial exchange. So they're not going to hold custody of your tokens, like FTX did, right? Or like Coinbase does. You don't have a wallet with them. They're just going to have a trading facility where they're going to effect trades. And apparently they're going to limit the cryptos that can be traded on this new exchange to those that they're certain are not securities. Of course, there is no certainty because the SEC can decide for whatever reason to claim anything as a security. But right now they claim that, well, Bitcoin is not, Ether is not, Litecoin or Bitcoin Cash. There's a few of these cryptos that this new exchange is going to allow to trade. But the other thing about this new exchange is it's not really a retail exchange. It's aimed at brokerage firms. So that if a brokerage firm like, Europe Pacific Capital, or it's not Europe Pacific Capital anymore, it's Alliance Global Partners. But let's say if a client of Alliance Global Partners wanted to trade Bitcoin in their account, what they're saying is Alliance Global Partners could route those orders through this new exchange so that we could buy or sell Bitcoin or Ether on behalf of a customer, and then have the token in that brokerage account or some other custodian that would reflect it in the brokerage account. And based on this, right, all this excitement around new ways to gamble on Bitcoin, you've got this big run up in price. But, I think that they are overestimating, meaning Citadel and this group, the demand to trade Bitcoin through brokerage accounts. I don't think there's going to be anywhere near the demand that they anticipate. There's no way that full service brokerage firms are ever going to allow their reps to solicit any crypto. It's just never going to happen. It's just not worth it as far as the risk of being sued by customers who lose money. I don't think full service firms want any part of this. Speaking from somebody who's, been involved in that for almost my entire business career. So I think it's simply going to be these self-directed accounts that will be allowed to be trading crypto. And there again, I don't think there's going to be a lot of demand. I think most people who want crypto don't want to do it through their brokerage account. They just want to have their own wallet and self-custody their crypto. And in fact, to the extent that you can actually use crypto as a payment method, even though very few people use it for that, you can't use it for that at all if you have it in your brokerage account. It's not even possible. Yes, you could use it if you have it in your own wallet. It's a clumsy, expensive, slow way to pay for things, but at least in theory, it's possible. But if you have it tied up in your brokerage account, you lose that. And so the only people who are going to really want to trade it in brokerage accounts are people who just, want to gamble in it. And I just don't think there's going to be as big a market for that. But the reason that Citadel wants in on it is because they want to make money. It's not because they think that Bitcoin is a good investment or they want to recommend it. They just want to book the bets. They just see that there's gambling and, they want a piece of the action. They see that FTX has crashed, right? Now, Coinbase is under investigation by the SEC. So is Binance. And so they think, okay, all these other companies are going out of business. Let's set up shop. There's an opportunity here. We could pick up this business because if these other exchanges are going down, well, there's an opportunity here to make some money because now, we could cash in on that action. We could book these bets because the other bookies are going out of business. Well, I just don't think there's going to be enough gamblers left. I think they're going to lose money. Yeah, they're making money now, but this is just another opportunity to sell just because there are new ways to gamble on Bitcoin doesn't mean that Bitcoin itself has any real value. It doesn't. Yes, people are going to say, oh, Peter's a hypocrite because you put an ordinal described on a Satoshi. Yeah, I did that, right? I don't know how much value those Satoshis have because I can put an ordinal there. I mean, maybe that value is somewhat above zero, but it may ultimately end up being a very inefficient way of authenticating ownership of something real. I mean, you may be able to do that with something that's a lot more efficient than Bitcoin. But I think this rally is a sucker rally. And it's interesting that you've got Bitcoin going up at the same time that you have gold going down. I had actually expected the reverse to happen. I thought that gold would probably go up and Bitcoin would go down. Instead, we're seeing the opposite. But I don't think this will last. I think it's a head fake. And so it is an opportunity for you hodlers out there. You can sell some Bitcoin and buy some gold. Now, I want to talk a little bit about the Juneteenth holiday that we just had. Now, I don't want to talk much about it because I did an excellent podcast on this holiday 2 years ago when it first became a holiday. And I did it on a special YouTube video. And it wasn't a sponsored video because I didn't want to potentially piss off any of my advertisers, because, it's a touchy subject, right? When you talk about that thing.
Before we conclude this video, I want to remind you to critically analyze the current market trends and not get carried away by short-term fluctuations. Both the Bitcoin rally and the decline in gold prices should be approached with caution. Remember, investments should be based on thorough research and a long-term perspective. If you found this video informative, please give it a thumbs up and subscribe to our channel for more market insights. As always, stay informed and make wise investment decisions. Thank you for watching, and we'll see you in the next video.